people, thank you. We are back again with another banger. Today we're gonna start. I wanna discuss about synthetic trading. We're gonna start from the introductory part of it to the what to the top ties of becoming a better trader. Yes, now we've been doing YouTube videos about synthetic trading. That is Crash 1000, boom 1000, boom 500, boom there's a boom 300, there's crash 500, and all those synthetics, the volatilities. Today I decided we go live, we discuss on I want us to discuss on synthetic trading in general, how to trade synthetic indices, from the introductory part of it to the last part of it. Now, introduction to synthetic trading. We'll go direct. We'll dive into the lessons. Imagine a group of financial advisors that never sleep, immune to economic news, political upheavals, and market gaps. Where where you trade 24/7, yes, even no Christmas day, with predictable volatilities and diverse range of opportunities to profit from, whether the market is going up or down or ranging sideways. Yeah. So welcome to the world of synthetic indices trading, offered exclusively by Deriv, which has been growing uh, in popularity over the last decade. If you are seeking controlled, transparent, and consistently active trading environment, then it it's uh, it's well worth taking the time to learn about synthetic trading and trading strategies. So in this comprehensive guide, I will explore the range of markets available on Deriv, effective strategies. I will also talk about risk management and practices. I will provide you with valuable insights and actionable tips to elevate your trading success. Whether you are a beginner looking to understand the essentials of an advanced trader seeking to refine your approach, I am certain this guide will help you. I've traded financially market for over 10 years and used synthetic products for over, I think, 7 years, if I'm not wrong. And it's my pleasure to share my knowledge. It might help someone, you, so that you avoid mistakes new traders make often, where of the sorry so that you can avoid certain mistakes that traders often make um, when trading synthetics. Yes. So I think we'll dive direct to a closer look at the of the lessons. Yeah, this part one, we're gonna start in this part. I'll help you understand synthetic indices and learn that products are available. What products are available? We will look at the growing range of synthetics indices and the general characteristics of different indices, such as volatility indices, the crash, the boom indices, all those. I will also cover some new indices like drift. There's a remember, guys, they introduced drift and shift in the volatility panel, and also the step indices. So those are some of the assets that we're gonna be looking at. I will also cover the mechanics of placing synthetic trades using both digital options and contracts for difference. That is CFDs. We'll cover CFDs also. We will also explore the different platforms in which you can trade synthetics indices, including we have MetaTrader 5, there's CTrader, and there's a Deriv X. These are platforms where you can all trade the synthetics indices assets. You remember we have the MetaTrader 5, we have the CTrader, and we also have We also have the trading view. We also have trading view, yes, guys. Yeah, for options, we will look at the derivative trader and smarter trader, and we will tell you about the platforms and products that are best for the new trader. Whether you prefer trading on a laptop, a desktop, mobile device, or a combination, you will have many features at your disposal to personalize your authentic indices trading experience. We will also explore derivative bots and unique web browser trading robots that allow you to auto trade options without needing coding skills. Yes. So another thing we're gonna cover is we will reveal actual trading strategies using technical analytics analysis and charting tools. We will also look at copy trading, automated trading, and new developments from derivative. Just as we don't all wear the same style of colors, synthetic indices also not a one size fit all markets. Some traders will prefer fast paced, some will prefer short term trades, while others will opt for longer term, slower, and steadier markets. I will explain different trading styles, including scalping, range trading, breakout trading, swing trading, and trend trading. I will also explain the importance of trading psychology, which is often overlooked but plays a significant role in trading success. Eh? Staying in control is as important. I'll also share money management techniques to help you do that. Before we bring the book to an end, I will share some top tips to help you become a better trader, along with a grocery of terms and links to useful resources that I personally use. I will also include these links to the videos where you can learn by watching trades being made. Yeah, the aim is to provide you with actionable insights and a practical trading plan without overwhelming you with excessive information or technical job jargon, guys. Yeah. So I think for today we're gonna start with the introductory part. Mm, Start with a free practice account, then step up on real trading. By this one I mean I think I'll advise you guys to first start with a demo account. That is an account. You open an account whereby you'll be trading on we call it a demo account. Remember, guys, derivative usually offers uh, new buys with a practice account and fund it with that is $10,000. That is almost 1.2 million Kenya shillings, whereby you practice with this account, and then later on, when you trading skills advance and you become a better trader, you can now shift to a real account where now you'll be trading with real money. The great news about trading with derivatives is that you can open a free practice account, allowing you to trade synthetic indices with other major financial markets using real life prices and conditions without risking real capital. The account comes from 10,000, as I said before, in virtual funds, which can be reset if needed. As you become more confident, you can start trading digital options with small fixed risk uh, stakes as low as $1. You can also step up to trading contracts for difference, that is CFDs, and much lower margin requirements that that are those offered by the traditional brokers. You can have a practice. You have a practice and a real account open simultaneously, allowing you to keep learning and testing trading ideas on your practice account uh, while making real trades on your funded account. As traders, we will as traders. We will never stop learning and testing new strategies. Okay, to open a practice account, just go to deriv.com. While you there, while you're there, you can also open a real account, which can be funded with as little as $5. To open a real account, you'll need to provide some information such as a government issued ID. This is a line. This is in line with the financial regulations and can also be done online. In most cases, your account can be live and ready within 10 minutes. Note, guys, Deriv is a licensed and regulated broker that follows know your clients, that is KYC rules. These measures protect both you and the company by ensuring that only legitimate transactions and clients are accepted. This commitment to security and compliance is one of the reasons why Deriv has remained in business for over 25 years, while many other companies have failed. So that is why Deriv has become outstanding because of transparency yeah, and it has become one of the best brokers in the world. So understanding synthetic indices. What is a synthetic index? Hmm, Guys, what is who knows? You can type your views on the comment section since we are live. So who understands? Who can explain to us what is a synthetic index? Okay, what are synthetic indices? Yes. Somebody on the comment section. Mm, Yes, I can see there. Bridget is writing synthetic indices are instruments that mimic real-world markets behavior, but are not influenced by actual actual market events. That is Bridget. Bridget, that is very good, very well explained. Thank you very much, Bridget. Another one, please. Uh, Yes, yes, that is Ibramovich. Yeah, Ibramovich also is saying it's a financial instrument that might mimic real world market behavior, but is not influenced directly by market events. I think Bridget and Ibramovich are right. I'm gonna go deeper into the explanation of synthetic indices. Because synthetic indices are financial instruments. They are what? They are financial instruments that mimic. What is mimicking? Mimicking is kind of copying. Like it's copying. It's copying. Mimic is like when you do something somebody does after you. So that is mimicking. So synthetic indices are financial. They are financial instruments that mimic, that copy. The real world market behavior, but are not influenced by actual market events. What do we mean? What does that mean? They are not influenced by real world market events. As we go back a little bit into forex trading. We all know forex trading is influenced by economic news, by world leaders like the big five countries in the world, that is China, US, Germany, and Europe. But so the forex market mostly is moved by the economic news and the uh, um, economic news that are resulted from the what this superpowers economy is performing. Whereas now in synthetics, we don't entirely rely on what Trump is tweeting, the president of USA is tweeting, for the market to move. Now, or we are not relying on what the president of China is going to tweet about China, since we all know China and US and Germany and Europe, the European countries, the UK. Mm, those are the world superpowers. So whatever their leaders are tweeting influences the behavior of the forex market. If they tweet something negative about their country, so that one automatically tells you that the economy of that country or the currency of that is the US dollar. For example, if it's the US, the US dollar will go down. That is the value of the dollar. It will depreciate. If it's the Chinese, if the president of Chinese tweets have a positive tweet or a statement about the China economy, it might have a positive impact on the Chinese yuan. Is it yuan? What is the currency of China? Do we call it yuan? Guys, you can type that on the comment section. Whoever who knows which currency the Chinese uses. Yes, I can see Bridget also. Bridget is very active. He's saying it's the Chinese yuan. Yes, that is very correct. Is the Chinese yuan. The Chinese yuan is influenced by the Chinese economy, and the Chinese economy mostly is influenced by the Chinese leaders. That is the president and those people controlling these big institutions, like the banks, the industries. Those are the things that drive the economy of a country. Yes. So that is what we mean by saying what are synthetic indices. So we said synthetic indices are financial instruments that mimic real world markets behavior but are not influenced by actual market events. Okay, they allow traders to speculate on market movement without the risk associated with geopolitical events or economic changes. That is what I just explained. The geopolitical events and economic changes. That is the economy goes down. The synthetics are not affected by that. So if the dollar goes down, the Kenya shillings go down, the Ugandan shillings go down. It doesn't influence the movement or the market changes in the synthetic indices. So synthetic indices use a proprietary mathematical generator with cryptography that is securely stored and cannot be accessed or tampered with. Okay, they do not rely on any external data that can be manipulated, since they do not have an order book. You remember, they don't have an order book. They are resistant to manipulations, where large orders can move prices, or insiders may have an unfair advantage. Yeah, so you cannot manipulate unlike the forex market, whereby we see too much manipulation, the hunting of your stop losses, and the margin calls. You find that the spreads are extremely high, very high on, especially for brokers who are not legit. On synthetic trading, we don't have that, so that's why most traders will. That's why most traders will prefer trading on synthetics rather than forex, because there's no much manipulation of the market. Yeah. Key features and benefits, 24/7 and it's D65 trading. Actually, in synthetics trading, we don't have like holidays. We trade 365 days in 365 days in all the days of the year. So that makes it more tradable, as in a good thing, more as in trading synthetic becomes a better thing compared to forex, because we all know forex market only opens from Monday to Friday, and it gets to Friday at 12 a.m. The market closes until you get to Monday around 3 a.m. That is Monday morning. So they usually go for recession. We call it recession during the weekends. But in synthetic trading, we trade from Monday to Sunday. That is 365 days in a year. Yes, it's flexible, offering flexibility for traders worldwide without the need to wait for traditional financial markets to open. They trade this 365 days a year, including weekends and most public holidays. Yes, so another feature and benefits of trading synthetics, it's that it has deep liquidity. Derivatives has constant deep liquidity, allowing you to buy and sell in a range of markets sizes without um, experiencing price gaps, which are common in many traditional financial markets. Even in highly liquid forex market, there can be periods of thin trading. Yes, another few features in synthetics is that it has high volatility. Yeah? By high volatility, it means synthetic indices are designed with predictable volatility patterns, which which eh, predictable volatility patterns, making them ideal for technical analysis. As I'll explain shortly, you can choose your risk tolerance and the level of volatility you are comfortable with. That is also there is something we called long stable history. Deriv has established over 25 years, and synthetic indices have been used by millions of clients around the globe. Yes. So another thing that is a key feature and benefit of trading synthetics is it's ideal for smaller account sizes. If you are starting with an account size of $1,000 or less, nothing compares. Okay, nothing compares to synthetic eh, indices in terms of trading conditions and opportunities. Forex stocks, commodities, and cryptocurrencies typically require a large account size to achieve the same trading exposure and market as synthetic indices. So those are the key features and benefits of trading synthetic. So I think for today we're gonna stop there. So tomorrow we're gonna continue with the types of synthetic indices. That is types of synthetic indices. We're gonna look at volatility indices. We're gonna look at crash and boom indices. We're gonna look at drift switching indices. Those are all types of synthetic indices. There is the DEX indices, there's the jump indices, there's the step indices. Bridget is typing range break indices there. Yes, I can see Bridget has typed that. There's the daily reset indices, and they also Ibramovich there is typing multi-step indices. That's also a types of synthetic indices. There's also the hybrid indices and then the skewed step indices. So we're gonna stop our trades from there for today. It was it was it was a nice one, and we'll hope to see you tomorrow. Thank you guys for your time. We'll see you on the next one. Ciao.